12 seconds.
Hey guys, on today's videos, I'll be discussing about the market structure. Some people have been asking me to do a short video on market structure for them. So, if you are looking for how to know the market structure and how to trade it, this video is for you. So, guys, let's get in for the video. Let's start. Okay, let me share the video so we'll get started. Um, Okay, this is it. I'm currently on the GBP CHF. You can see it's GBP CHF. And so I'll be discussing about the market structure. So this is it. Market structure. So guys, put your focus on this class. It's gonna help you a lot. Identify the market structure, how to trade it, how to know when market is trending up, how to know when market is trending down, how to know when market is on consolidation, there is sideways, when to avoid price, and then wait for a clear breakout. So this is it. We are currently number one. We have the uptrend. We have the uptrend price. Okay, let me make this one smaller. We have the uptrend, then we have the downtrend, and then we have the consolidation, or sideways, or you probably call it sideways or sideways, or you call it sideways. This uptrend and downtrend. Whenever market is making an uptrend move, you see price going this kind of move, price creating this kind of move, create a low and created a high. And then you notice price going up, breaking up this high that it created here, and then coming back down wasn't able to break this low, and then instead make this kind of move here, boom, and then instead went back up, break this high. You notice that price is an uptrend. What you have to do is to wait for price to come back to this low. This will be your entry zone when price will come back to this area of rejection. So when price created this is something like a double bottom on this particular zone. Then price make this high and then created another high here. Price created another high here, which is price created another high here. This is a high that price made, and this is a low that price made. This is another low that price made here. And then price eventually break out of this high that it created. So as it broke out of this high that it created, what will happen? Price will have to come back to this low that it created here. Then this will be your entry zone. So if you enter from this zone, your stop loss will probably be below here, and then you take your TP to the next zone. At least take 2 ratio of it. This is it, and you figure out price will make a rejection on this particular zone because this zone is very active, because this is where the price broke out and then went back up, break this high. So if you break this high, you see price coming back again, test on this low, and then keep on trending to the upside. So by then it would have taken out your TP. You see that? By then it would have taken out your TP. This is for the uptrend move. And then if you are going to the downtrend move, this is the downtrend move, which is bearish, uptrend, bullish. You understand? So if you are going for the downtrend move, this is it. I just turned the chart down, and you notice price will make an up move here, equal high on this particular zone. And what happened goes back down, break this low. What will happen? Price you have to retest on this low. This low will be your entry zone. This low will be your entry zone. At times you figure out price we break this low, come back here, and then make something like this equal low. By then it would have taken out your TP, and then goes back up to meet this high. And then from here again, continue going back down. This is a market structure. You understand? So this is it for the downtrend. And this is it for the uptrend. If you got market making this kind of move, by then this is your TP stop loss. It won't give you that much because you waited for the right entry to enter the that particular trade. You entered it right. That is called a sniper entry. Most of us are looking for sniper entry. This is a sniper entry. All right. So this is it. Price would have smashed your TP. Price would have smashed your TP. So, and when we come to consolidation markets, you notice price giving us this kind of move, giving us this high, coming back to this low, going back to this high, wasn't able to break this high, come back to this low, wasn't able to break this low, struggling to break the high, struggling to break the low. So what you have to just do is to pick out a horizontal ray. Oh, mark out the low, mark out the high that price are struggling to break. And then wherever price breaks will be your entry, will be your decision. When price is here, don't make any decision. Don't buy, don't sell. Allow price to give you a direction. So whenever price break out of here, it will give you a direction that price is selling. So what you have to do when price break out is to enter a sell position once price retraces on this particular zone. This is your entry position, and then your stop loss will be above your TP, your target to ratio. So you figure out price broke and then retrace back to this zone, give you a confirmation candlestick that you're familiar with, and then hit back down straight to your TP. See that this is massive. So if it breaks to the upside, same thing happens. You goes up, you enter when price retrace on this particular zone, and then ride it up. So this is how you trade a consolidation when price is on consolidation. Don't make any decision when price is here. Then this is for the uptrend. Enter when price break out of the high. Enter TP 2 ratio, 2.5 ratio, 3 ratio, depending on the ratio on how far you're targeting the price. You understand? So this is it. This is it for the market structure. For those of us that want to understand the market structure, that don't know about the market structure, I think this video have explained it more easier for you to understand it and know how to trade it perfectly. All right. If you haven't subscribed for my YouTube, please do subscribe to get more of my tutorial videos. All right. So bye for now and take care.